Hello everyone and welcome back to Living in OC. Today we're diving into the latest market pulse for Orange County in September 2025. Whether you're looking to buy, sell, invest, or just stay informed about the market, you won't want to miss this. Let's explore how the real estate landscape is shaping up in this super desirable county in Southern California. First up, let's talk about active listings. We saw a slight drop last month with active listings falling from 6,000 in June and July to 5,850 in August. Still, this is the highest level of inventory we've seen since August 2020. This elevated inventory gives buyers more options than they've had in recent years, easing some of the pressure from historically tight market conditions. For sellers, it's a gentle reminder that pricing strategically and preparing homes for showings is more important than ever to stand out in a more competitive landscape. Median days active on the market. This has steadily increased from 12 days in April to 21 days in August. Homes are now taking nearly twice as long to sell, which is typical when inventory rises and sellers face more competition. For buyers, this means more time to evaluate options and make thoughtful offers. For sellers, it highlights the importance of staging, presentation, and pricing competitively to maintain market interest. Next up is months' supply of inventory. And since April 2025, this metric has been above 3 months, the highest level since 2019. From 2013 to 2020, months' supply of inventory fluctuated between 2 and 4, so this is more of a return to pre-COVID norms than a fundamental shift in the market. While some may interpret this as a slowing market, it's really a normalization after the frenzied post-pandemic period. Balanced inventory gives buyers more choice and helps stabilize pricing, while still keeping demand healthy in sought-after neighborhoods. Next, let's look at the median percent of original price received. Excluding the COVID years, this metric has fluctuated comfortably between 97.5% and 100%. In August, it dropped slightly down to 97.8%. This means there are sellers that are making small concessions, which is expected as the market balances. For buyers, there's slightly more room to negotiate, but in a high demand area like Orange County, homes still often sell close to asking price. For sellers, this reinforces the need for accurate pricing and strategic marketing. Looking at closed sales, we see a more dramatic story. Early 2023, 24, and 25 saw levels not seen since the 2008 housing crisis. In August, closed sales dropped slightly to 1,871 from 1,931 in July. The slowdown in closings is a natural reaction to higher inventory and cooling buyer urgency. It's not a signal of a market crash. Orange County's desirability and strong local economy mean transactions remain steady despite the slowdown, and sales are still well above historic averages for non-crisis periods. Hey, it's Mark here. Thinking about making a move to Orange County? Subscribe and tap the bell so you don't miss neighborhood tours, real numbers, and weekly market shifts. Whether your timeline is 9 days or 9 months, my team and I will help you make the move with zero guesswork. Call, text, email, or schedule a Zoom. Everything's in the description below. We'd love to help you make a smooth move to Orange County. Now, let's talk about price per square foot. Despite increasing inventory and declining sales, pricing has still been hitting new highs this year. We saw a slight decrease from $678 per square foot to $669 in August, after reaching a record high of $688 in May of this year. High price per square foot reflects strong underlying demand and the premium buyers place on location, amenities, and quality. Even with more inventory and slower sales, value is holding, which is a positive signal for both buyers, sellers, and investors. Similarly, for median sales price, after surpassing 1.2 million in June 2025, we've seen a slight softening to 1.16 million in August of this year. This small dip doesn't indicate a downturn, it's a normal seasonal adjustment. Orange County remains a record-setting market, and buyers should expect high-quality properties to continue commanding premium prices. Now, let's take a look at the broader economic picture, because this directly impacts the Orange County housing market. First, inflation is coming down. The US inflation rate, as measured by the Consumer Price Index, was 2.7% in July 2025, a decrease from the previous month. Lower inflation helps preserve purchasing power and keeps the cost of living in check. Good news for buyers. Next, let's talk about the jobs market. The US economy added just 22,000 jobs in August, and the unemployment rate inched up to 4.3%. Revised data also shows a loss of jobs in June for the first time since the pandemic. Job growth has been anemic for 4 months in a row, down 75% compared to the same period last year. Slower job growth can affect buyer confidence, but Orange County's local economy and lifestyle appeal help offset these concerns. Finally, mortgage rates continue to trend downward. The average 30-year fixed rate last week was 6.5%, and the share of mortgage applications for refinancing reached nearly 47%, which is the highest since October 2024. Analysis for Orange County: lower rates are boosting optimism among buyers and current homeowners, making financing more accessible and expanding opportunities to refinance. Even with slower national job growth, demand for housing remains strong locally, supported by desirable neighborhoods, limited supply of premium properties, and lifestyle factors. This combination of falling mortgage rates and stable inflation is likely to support home values and encourage buyers to act, even as the broader economy shows signs of slowing. So, that's your Orange County September 2025 market pulse. Overall, inventory is slightly higher than previous months, sales are cooling but still remain healthy, and prices continue to sit near record highs. Buyers have more choice and negotiating power, while sellers must focus on preparation and pricing strategy. Expect a balanced market in the coming months, with modest softening in prices likely, but strong underlying demand keeping Orange County real estate resilient. Falling mortgage rates and controlled inflation should encourage buyer activity, making this a strategic time to enter the market or refinance existing properties. Thank you for joining me today. Be sure to like, share, and subscribe for more updates on the real estate market and all things Orange County. Leave a comment below if you have any questions, and until next time, take care. I'll see you in the next video.